Hey everyone, and welcome to our session today at the Finance Magnates Virtual Summit. My name is Rachel McIntosh. I'm a cryptocurrency journalist and podcast host at Finance Magnates, and I'm going to be the moderator of this panel today, which is entitled The Future of Finance: How Fintech is Changing the World. And I'm so pleased and excited to have here with me today some of the fintech industry's top thought leaders and experts. Yuri Grunbaum, Chief Executive at TipRanks; Giuseppe Sofo, FinTech Client Advisor at McKinsey & Company; Suzanne Kisti, Chief Executive of FinTech Circle; Nir Netzer, founding partner of Equitech Group and chairman of the Israeli FinTech Association; and Agada Nameri, partner and general manager at iAngels and 21M Capital. So our discussion today is going to last about 45 minutes. After that point, we'd love to hear from you during today's presentation and after presentation. If you have a question for our speakers at any point, feel free to leave us a comment in the chat box. If we don't get to your question today, then we'll do our best to follow up with you afterward. Also, a quick FYI, the webinar is going to be available on demand after this live session. So if you miss anything, don't worry. We'll be sending around the on-demand recording when it's available. And there you can find today's panel and other related content, including blog posts and upcoming webinars. And last but not least, we'd like to spread the word. So if you are attending this webinar today, be sure to post about it on social media. So before we get going, I'd like to ask each of the panelists to give themselves a brief introduction, starting with Agada.
Well, hi everyone. Rachel, great to see you again.
Great to see you too.
Very excited to be here. Haven't had conferences in a while, so quite cool doing it on Zoom. My name is Agada Nameri. I'm a partner at iAngels. iAngels is one of the most active VC companies in Israel. We invest in early stage startups, and we like to invest in industries that are early on the innovation curve. And as such, in 2016, we started investing in blockchain. And in 2017, we started our first actively managed fund that invests in blockchain and digital assets called Juno Capital, which lies within 21M Capital, which is our arm that invests in anything digital asset related, blockchain, etc.
Okay, excellent. Thank you, Agada. And I'll pass the mic to Nir.
Thank you. So I'm Nir Netzer, the chairman of the Israeli Fintech Association, Fintech Aviv, and the founding partner of Equitech Group. In the Israeli Fintech Association, we host fintech events since 2014. We have more than 30,000 community members. We represent a couple of thousands of startups in the field of fintech in different sub-segments of fintech. And in Equitech Group, we consult and advise on fintech matters to both financial institutions and fintech startups. Thank you for hosting me here. I'm looking forward to this panel.
Thank you, Nir. Next, we have Suzanne.
Hello. Yes, my name is Suzanne Kisti. I'm the founder and the CEO of Fintech Circle in London. And what we do is we invest in fintech startups. We're an angel network. So we're about 70 investors, and we're investing early stage capital into fintech startups. And we also write books. So we've written 7 books already, published by Wiley, on topics from fintech to wealth tech, to insure tech, pay tech, artificial intelligence, also legal tech. And we also work with banks and other financial institutions on courses and innovation workshops.
Wonderful. Thank you, Suzanne. Next, we have Giuseppe.
Hey, everyone. Giuseppe Sofo from McKinsey. Very good to be with you today and to talk about fintech. I can talk about this for days, and I'm sure you all too. I'm part of McKinsey fintech practice, and my role is especially focused on helping fintech companies work with our incumbent clients or receive investment from our investor clients. And increasingly, I've been also working with fintechs directly to help them grow, reach scalability and profitability. Really happy to be with you today.
Yeah, thank you so much, Giuseppe. And last but not least, Yuri.
Thank you, and hi everyone. My name is Uri Greenbaum, and I'm a co-founder and the CEO of TipRanks, a big financial data company. Basically, we transform boring and structured text into exciting research tools. And we look at resources such as financial news, social media, corporate filings, analyst research, all that. We have two lines of products. The first one is our retail-facing website, where we have close to 2 million monthly users. And then we have APIs and tools that we license to financial institutions and online brokers, mostly to increase engagement and education for the users. Some of our clients include E-Trade, TD Ameritrade, NASDAQ, Saxo Bank, all the big players, I'd say, in North America.
Okay, wonderful. So thank you all for being here. So let's start off our discussion today with a lightning round. So what I'd like to briefly hear from all of you is actually about the title of our panel today. So our title is, quote, "How Fintech is Changing the World," which is kind of, let's be real, it's a little buzzwordy. It's kind of a broad topic, but I'd like to know sincerely from each of you, what do you think Fintech is doing for the world? How is Fintech changing the world beyond the industry itself? We'll go in the same order as we did our introductions just now. So first, Agada, what do you think?
Good that I'm first, because I assume we're all going to say around the same things. So so at least I'm not repetitive.
Got to be original, yeah.
Yeah, I think
I will summarize everything at the end.
Good. I think one of the most important things that evolution in fintech or innovation in fintech does is actually around inclusion and opening the doors for people who were previously underserved or not served at all, the unbanked, people that work in less fortunate circumstances. And the innovation in technology in fintech specifically enables access for these people into the traditional financial system, which in turn allows them access to many other things that have been deprived from them previously. And I think this comes along with education. When you have an opportunity to be part of a system, then you want to learn about it, then you advance by the nature of being part of something that you weren't part of before. So I think innovation in fintech goes well beyond just the industry itself.
Absolutely, yeah. So now I'll pass the mic to Giuseppe. So we have inclusion, accessibility, education from Agada. Giuseppe, what do you think?
I get the second spot. I'm still lucky. I think based on I want to build up on what Agada said. I think for me is access to financial services, is having credit to SMEs that will not get credit otherwise because banks cannot score them. Getting credit to underbanked who don't have a bank account, so they don't have a credit profile. And aside from access, another big point for me is also speed and job creation. Speed of services. You now, through technology, you can actually send payments to people in any part of the world real time. And this is having a huge side effect on the whole economy and the way people actually transact with businesses, but also between people. Remittances is a huge topic. It's one of the first use cases. And then of course, job creation. Fintech is becoming, as an industry, a huge employee for a lot of people, certainly in Europe, but probably around the world as well.
Yeah, absolutely. Flow of capital and job creation from Giuseppe. Okay, next we have Suzanne. How is fintech changing the world?
I would say, when we look at the pandemic, lots of governments worldwide relied on fintech companies to pass the money into the society, provide loans to SMEs and to small companies. So we have got, where fintech really becomes mainstream and where fintech solutions are being used to create an equal playing field in our society. And we also see that with loans in general, that loans are not just for fintech companies, but for anybody, anybody in our societies. It doesn't matter if it is a small shop or if it's, let's say, a pharmaceutical company, but all of those companies have got access to better funding options now as a result of fintech innovation. So I think it's really becoming mainstream now, which is great.
Yeah, absolutely. Especially, and in the United States, we saw, all these fintech companies stepping into the ring for the first time with government assistance. Thank you, Suzanne. Next is Nir.
Thanks. So yeah, of course, I'll join my colleagues here in saying that, of course, fintech is improving efficiency, brings the banking industry to greater achievements, to a greater edge and tech. It's not just to the unbanked and underbanked, and it's also, of course, it's. I think that it's helping for cost reduction, significant cost reduction for the end clients, for the end clients of different banks and other financial institutions. It can be investment houses or insurers or different service providers in the financial industry. I think that the fact that different tech giants, GAFA players maybe, and other tech giants are coming into this industry and providing different banking services is also causing to great efficiency and cost reduction. And that's where I think the future of banking is heading to different players joining this game.
Okay, wonderful. Thank you, Nir. And last but not least, oh, excuse me. Last but not least, we have Yuri.
Thank you. So just to reiterate on what everyone said, I think that fintech makes a lot of services accessible to those who did not have that before. But even if we look back on how our lives were 15, 20 years ago, when we'd wait in line in the bank and wait in line to withdraw cash and try to get a loan, and everything was so complicated. You wanted to make investment, you'd call your broker. Everything was around the physical bank. And today, most of the people I don't know don't even have a wallet. Everything is online. Everything is easy. Payments are online. It's easy to get a loan. It's easy to invest. Everything is so accessible. And going to Nir's point, because there are many providers now that have competing services to banks, then it creates a lot of pressures and also pushes the prices down. Competition makes our life as consumers much easier and affordable.
Absolutely. So Giuseppe, then I want to turn the mic back to you. So after hearing all of these answers, and of course, a couple people mentioned the pandemic or pandemic related things. Can you talk a bit about how, this year versus last year, how has the pandemic shaped the course of these fintech trends moving forward?
Yeah, and I'm going to answer this question, but I want to build on what Nir said before on cost reduction. To give background to my answer, so cost reduction has been one of the massive and predominant value propositions of a lot of fintechs. The flip side of the coin is that that makes less money for the business itself. So if you're selling or you're offering a service for free or for a very, very small a fraction of cost of your competitors, you're also making less money than your competition. And this has been a lot of, so there were two things there were two trends of world pre-COVID. One was growth over profitability. And the other one was basically your value proposition on price reduction. So, and all of this has been possible because there has been a lot of private money or VC money, to a certain extent also public money flowing to the sector, because that has been a very successful model for a lot of investors, where essentially their IRR was calculated on the next round being much higher than the one where they put money. And they enabled essentially a huge R&D expense and investment by putting money where the company was losing money, was bleeding cash, to essentially get better services to their clients. Now, what happens is that the VC funding is drying up, or in general, investor funding is drying up because investors look for safer investments and they have less money to invest. In turn, that means that a business that is not yet sustainable, it was planning on becoming sustainable, meaning profitable in 5-10 years time, has to shorten their time span and their horizon. So they need to refocus completely their strategy into products, services, business model that are profitable, right? Otherwise, the business is not sustainable. And that has two big implications. One is that you can say that innovation in a way is decelerating, is slowing down, because it's not fueled by these investors' money that cover the lack of profit. And then the other implication is that it has a shift in the type of products that are offered in the value proposition for the customers. So I don't think that fintech is something that is going to die anytime soon. And I mean, it also depends on our definition of fintech. However, we will see a big shift in the way we are seeing these companies operate. And yeah, and that has been essentially triggered by the pandemic and the lack of
Yeah.
capital.
Yeah, definitely. Very, very interesting stuff. So Agada, can you comment on this from a VC point of view? So, can you talk a little bit about what Giuseppe said, and also, from your perspective, how has the funding landscape sort of shifted?
Well, first of all, I agree in general, not just in fintech, but I think in general the pandemic, but even before, there were kind of cases with companies like WeWork and so on, that people were talking about the fact that they're spending money and they're not generating profits, and that model came to question when some crises happened in these companies. So and I recently also read that a new term was coined. So people are not looking for unicorn companies; they're looking for camels or something along these lines. I don't know if you heard of it, but the idea is really what Giuseppe is saying, that investors are looking for companies that have enough meat in their business to be able to sustain storms or go into severe weather conditions, so-called, and triumph even at pandemics or crises. So I agree on that. I actually haven't really seen it though in the early stage investment landscape. In terms of fintech, we focus primarily or mostly on blockchain. I think there are other considerations that come into play, business models, or these companies are not, most of them are not revenue generating. They're mostly on the tech side, and we look for any startup, we look at the team and the total addressable market and the technology. That hasn't changed, and that I assume will never change, because these are the fundamentals when you do your due diligence. But in terms of kind of how you assess an exit scenario, or you assess the ROI on the investment, then yes, a lot of things change. I think regulation has also a very significant impact. We've seen it with Ant Financials now, which regulation really kind of turned the table on them, and could potentially cut their valuation very significantly. So there are things are research or due diligence or valuation of companies is always something that you need to keep your hand on the pulse and see where the market is going, and what external how external circumstances impact, or external changes of the industry impact the future. I don't know if I answered exactly to what Giuseppe said, but I tried at least.
Yeah, no, absolutely. I also want to turn this over to our other panelists. Is there anyone else who'd like to comment on how the fintech funding landscape has changed as a result of the pandemic?
Yeah, actually, Rachel, we saw that two interesting phenomena. I think that the one phenomena was that VCs were focusing in their existing portfolios and investing follow-on investments, and avoiding new investments and examining new companies because of the high risk. And we saw another interesting phenomena, mega rounds. We saw, for example, N26, Monzo tracking huge amounts of money in Q2. So mega rounds was a big deal in the COVID-19 period. And if I made on that, I think that the sub-segments of fintech that got a huge push thanks to the COVID-19 that worth mentioning are undoubtedly authentication, anti-fraud, cybersecurity for the financial industry, because of the fact that everything went and shifted online. Banking services went almost only to an online service. So we saw the cybersecurity sub-segment enjoying this very much, as well as trading platforms such as T-Prank Solutions and others. that I'm sure Uri can elaborate on this. There are many trading platforms because of the volatility in the market. I think that the end clients were looking for different capital market solutions. And I think that biometrics and different payment methods were on the rise as well, and tracking the interest of investors when digital payments were the only way to go. So I think these are the three sub-segments that enjoyed the COVID-19 situation in a way.
Definitely. So Yuri, I think your name was mentioned there. Do you want to comment on this?
Well, not specifically on what Nir said, but I think that there is some correlation between the behavior in the VC world to the capital markets. And when Corona started to appear everywhere, then all the growth companies, including in the capital markets and in the private markets, started tanking. And there was less interest in doing more investments because no one knew what will happen. And later on, an IPO boom started, and we saw very high valuation, 30, 40, 50 times revenues. And if all the VCs at the beginning were only concerned about their existing portfolio and how can you help them stay in the game, then it kind of, I think they switched gears in around June, July, when they understood that it's actually not a disaster, it's more of an opportunity. And I mean, that's my take on what's currently going on.
Yeah, definitely. Suzanne, do you want to comment on this also before we move forward?
Yeah, I mean, I agree with everything which you said already. I think maybe to add what we've seen when we go up, to the asset allocation level, we've seen investors moving money to gold, to commodities. We've seen people putting money into cash, money market funds, just to keep it safe so that they can invest at the later stage at lower valuations. So we have seen, people repositioning their portfolios to be ready when valuations come down at some stage to get into the market at lower costs. And so I think, but everything else what you said before is, we've seen that as well in the UK, that people invested initially into their existing portfolio companies to help them survive the crisis, and only now starting to look at other opportunities as well. But I think long term, the trend is positive, 100%, because fintech will change the world, and there will be it's not a short term momentum trade, but it's a long term sectoral shift, which we are seeing. And so I think all VCs, all private equity houses want to have a stake in this industry, which is a good thing for all of us.
Definitely. So next I want to ask, this question is for Nir. So focusing this discussion a little bit, this discussion about how fintech funding has changed a little bit closer on early stage startup companies. And along with that, I want to ask you whether or not you think that the ways that funding has changed have also changed the rate of innovation. There's been argument that, a lot of funding has kind of helped these companies, bigger companies, get bigger, these camel companies that are already somewhat functional and safe. But at the same time, those companies might not be pushing for innovation in the same way that an early stage startup company would. What are your thoughts on that?
So yeah, I agree with this assumption. I think that these last 3 quarters of 2020 definitely pushed back several early stage startups, and I think it made maybe it affected them in 2 ways. Some of them shifted and went to different segments and orientations and changed their product. And this, I'm talking about early stage startups, seed stage startup, ideation stage startups that were starting their operations at the end of last year, end of 2019. And I think that the shift went towards the sub-segments I mentioned earlier, maybe also towards InsurTech, because we saw some, for example, IP insurance policies that now are issued. We saw cyber insurance policies that now are issued because different companies are concerned of different hacks in this period. So I think that it affected early stage startups in their focus. That's at first. And second, I think it changed the industry in a good way. I mean, I mentioned that before, we see less investments, the number of investment declined, but the amounts of money that were invested were higher. So eventually we understand from that analysis that we have less companies tracking more capital for each company. So yeah, the rounds went bigger. So the younger companies got neglected. Some of them didn't survive this move, and some of them had to shift and make a pivot with their ideas. So that's what I think we saw here.
Yeah, absolutely. Does anybody else want to comment on that before we move forward?
Maybe one thing, I think part of the claim was that the bigger companies may have less appetite to invest in innovation, and I think it really goes. I don't think we can say it categorically. I think it really depends on the type of the company and the culture, and where they come from. If you look at companies like eToro, for instance, a huge company by now with a very solid business, definitely a camel, unicorn, whatever you want to call it, they fit everything. But they put but you see them putting in a lot of resources and efforts into their technology, into new product offerings, new innovative types of activities. And I think another good example in this sense is from the digital assets or blockchain space, a company like Binance, which is still, let's say, can you call it an early stage startup, but a very, very big company already, with hundreds or thousands of employees, still at the forefront of technology innovation. So I wouldn't say that it's a size issue or a maturity issue. I think it's a matter of who leads the company and what is the agenda.
Yeah.
Just adding into that, building on what Agata just said, I think it really depends on the subsector or sub area of fintech that we're looking at. There are some of these sub areas, namely online payment processing. I don't know much about crypto, but what Agata mentioned, crypto, also some of the online remittances, or for another example could be so Nir was mentioning before, all the, let's say, AML, onboarding, digital onboarding, all of these had a massive opportunity. But these companies are probably like the top 5% of the market that have got an asymmetrical opportunity compared to the rest of the market. For all the rest, it's unfortunately like a moment where they need to adapt, where if they have to choose to pursue something which is super innovative, but the potential is long-term or too long-term, or it's very uncertain, they will probably have to down prioritize that unless they're really capital rich. And that applies to any company, I think.
And maybe just to comment on top of that, we need to remember that innovation is something that takes time. You don't see, and the world changed. We're only in this situation for 10 months now. It seems like it's 20 years. But it takes time to roll out versions, to plan, to strategize where you want to do, what does this opportunity bring, that we should really change our plans and focus on that. So I think we haven't even started to see the beginning of the innovations that all the great companies are now working on.
Yeah, good. And Suzanne, I think we lost you for a minute there, but you're back now. So glad to have you back. So Yuri, I actually I want to ask you this next question, which is a bit about, sort of the way that, as you mentioned, that although this situation feels like it's been happening for 20 years, it's been literally less than 1 year. But a lot has happened this year, and in fintech, what that has looked like on a practical level is that we've seen tons of new users entering this space. People who previously conducted all of their financial business in person or on the phone are suddenly grappling with apps and software and all these different things. Can you talk a little bit about these changes and what that means sort of from an investment perspective? Yeah, I'm just going to leave it there and see where you go with this.
So the investment space, the wealth management space, has obviously exploded during this time, and specifically the retail investment space, with working from home, volatile markets, maybe most importantly, no sports events at all, and zero trading commission, which is, a disruption that started in the US about a year ago or so. And so what we saw is that there was the market of the active accounts grew by almost 50% in the US, of people looking for action, staying at home and looking for what to do. And that was a very big impact on an industry. And at least in the US, it's an industry that is now going through consolidation with a very strong unicorn, Robinhood, which is completely changing the industry. And so what we see is that a lot of platforms are trying to figure out what do they do with all these new investors that have no experience, traders. Everybody wants to be in the game, but nobody knows what to do. Everybody knows, the 10 big companies, the Apples of the world. But if you want to invest and you want to build a diversified portfolio of good investments, then you need research, you need ideas, and most of all, you need education. And so what you're seeing at least in North America, is that you see that the platforms that are getting most of this market share are either the very simple platforms that basically show you 5 stocks and you have a button that says buy now, or the platforms that invested a lot in research, education, and onboarding. And then there's a long list of brokers that are extremely complicated, full of charts, analysis. And when you bring in, and this is something that we did many times here at Tiprinks, we brought people and put them in front, people without experience that were interested in that, to see how they feel and I'm not going to disclose names of platforms, put them in front of some more complicated, comprehensive platforms. And unsurprisingly, these platforms did not gain any market share, even though the market completely changed. So obviously the winners are the Robinhoods of the world. And I'd say that maybe the TD, E-Trade, Schwab, those that provide a lot of research and basically hold your hand through all the onboarding process.
Okay, yeah. Anybody else want to add to that?
Yeah, if I may add to that, I think that Robinhood also introduced to the world, it's not just zero commission trade, it's also fractional trading, right? And I think that if you give youngsters the opportunity to invest in fractions of shares in lower amounts of money, so yeah, of course, we'll have a bigger audience for this game. And that's what happened. After Robinhood, there are many platforms that join along this game, and I think it's now a common thing to offer fractional trading.
And that's something that every bank in the world is now basically working on.
Yeah. Also Pepper in Israel, by the way, you can do that in our very friendly app.
Yeah, maybe to add on that, I think, and it goes back to what I said in our first question. I think a lot of it has to do with education. I mean, people were at home, they had time to spare. A lot of things went from the physical to the remote. People needed to get a grip of the technology and of the apps and so on, and by no choice. And when you don't have a choice, then it goes from a nice to have to a must have suddenly, and you're basically forced to deal with it, and then you discover that it's not that frightening actually, and then you become maybe more inclined to use these platforms. So Robinhood is one. eToro that I mentioned is another that introduced also from the education point of view, copy trading and so on. So you don't even have to know anything aside from looking at other people's trading performance and just say, okay, I like this guy. Before I make my own decisions, I just might copy this guy and then see how it goes, and you learn and you get people much more educated as to what their options are, and that's a really significant boost, I think, to all of these different companies or platforms.
Absolutely. So, Suzanne, this next question is for you. So we've been talking a lot about trends that have been going up this year, things that are becoming more popular. What I'd like to know is, from your perspective, can you talk a little bit about the trends that disappeared this year or lost popularity, and what the fintech industry can learn from those things that we have lost?
Yeah, I mean, I would say, some of the trends which we have seen
having slight
with lots of banks, all the ones I worked in 15 years, everybody was not ready for cloud yet because people wanted to have the programs as software on premises. But now we've seen, across financial services, within a month, everybody went to work from home, and not just, easy jobs, quote unquote, but the toughest ones, the traders, the operations teams, the investment bankers, everybody worked from home, and everything was possible all of a sudden using the cloud. So I think it gave lots of confidence that, number one, banks are able to make fast decisions, which often they've been criticized before that they can't make fast decisions. But if there's an emergency, they can, obviously they can. And I'm on the board of a UK bank, and we were proud that we managed to do that quickly, because we would never have thought that possible beforehand. And so I think that's one thing which definitely has changed, the belief that you can work from home, and that working from home on a personal level is not career suicide.
Yeah.
When I think back, it was always, people who wanted to have a career and wanted to be promoted had to be in the office, had to be seen. There was peer pressure to be long at work at night time. But now people will work more from home, and will have a balanced approach, and I think those things will change our society and how we combine life and work long term. And so I would say, cloud is a huge trend. Artificial intelligence, has become even more important. Everybody wants to use AI, number one, to lower costs, or to be more compliant, because you can recognize patterns when you think about insider manipulation, avoidance, market manipulation, patterns that you can discover, things which you should want to discover before regulators do. So those things will take even more of a priority in the future. And I would say those things, we've really seen, taking precedence and taking center stage, in terms of fintech innovation. And just to the previous point, when we talked about the stock market, I think here what is very interesting to see is how the stock market often is disconnected to our real society and the real economy we are in. It always surprises me when you hear in the news, there are thousands of people have been infected by COVID and thousands of people have died, and the stock market goes up. So those things I think we also see, and I think it's difficult for people probably in our society to understand how can this happen, how can be such a disconnect, how can this be fair? And I don't know if it's true to the fact that, we see lots of interesting trends appear, and some of them we have got answers for, others we don't know yet, what the drivers are behind and how it will evolve in the future.
Mm-hmm. Yeah, you're absolutely right. It has been, sort of very strange to see the stock market just go up and up while, like, at the same time the COVID infections have been going at the same time. Does anyone want to comment on Suzanne's answer?
I would just say that I don't think that the capital oil markets are too disconnected from reality. At the end of the day, we're looking now at the reports of Q3, and we have some very strong companies that surprised with the earnings. So the first month or two was a disaster, and everybody ran away and thought it was the end of the world. But I think that people realized towards Q2 that actually it's a big opportunity for many companies. Any online company had a big advantage here. So the money moved from the offline stocks to the online stocks. So obviously companies like in the traveling industry, they didn't deserve it, right? But it makes sense that their stock will go down, while companies like Amazon or Apple or anyone selling online or monetizing their digital assets, then I think it makes sense that their stock will go up. I mean, you would agree that Zoom should be worth more than what it was prior the pandemic, right? I mean, that makes sense. But that is one extreme example. There are many other examples of companies that are just thriving through this time. And so we see that the Nasdaq is growing much faster than the Dow.
Okay, yeah, very good point, Yuri. So we are nearing the end of our discussion. So what I'd like to do at this point is start throwing some questions to our whole panel, coming in from the comments here. So first question for all of the panelists. If you had to pick one fintech trend to go quote unquote long on, what would it be? So in other words, please tell us about a fintech trend that is currently developing that you think will continue to gain prominence in the future, and briefly also why you think that trend is important. So we will start with Giuseppe.
Yeah. Oh, I was hoping you were not going to ask me first.
Save the last.
Oh, gotta answer this one. Yeah.
No, I'm joking. I'm joking. I'm joking. I'm joking. I have a lot of trends that I think are going to continue. But open banking is an example. It's something that it's particularly interesting for me personally, because for me it's like it has the potential to flip the odds in a lot of markets and to really automate and help a lot of companies, payments, account aggregation, do interesting things. What happened with open banking? Open banking is something that is pretty much like a legal and technical framework that started years and years ago. It was successfully, let's say, started to be rolled out in UK 2 years ago, and in the rest of Europe through PSD2 1 year and a half ago. And everybody expected that within 12 months, things will fly with open banking. Like people would start making payment from one account to another automatically. What happened is that things, as Yuri mentioned before, things take a lot of time. Innovation takes time. Adoption of consumer takes time as well. So fast forward 2 years later, I think we now have a renewed opportunity through COVID for this type of services to start picking up more. For example, one of the biggest cases is credit. Credit now is, as a sub-area of fintech, is suffering a lot because there is more risk in the market. There's more driven by more uncertainty. And all the lenders, high street banks or alternative fintech lenders, they all struggle to score customers and to monitor the risk position of their customers over time. Open banking essentially can help the lenders aggregate all the information and transactions of these customers and provide a much more accurate and better representation of any customer financial situation. Therefore, it's going to accelerate the adoption of open banking as a tool is going to accelerate because of COVID. And I think I would stop there and I will leave time and room to the others.
Love the poll. So considerate, Giuseppe. It's wonderful. Okay, Nira, we'll pass the mic to you.
There are so many subsegments that I can say that will become a huge thing in the future, but the one I have to mention is cryptocurrencies. I'm sorry for taking everybody's comments right now, but yeah, we have to indicate that is really booming these days. Forget about what happened 2 years ago with ICOs and take a look at what's happening today with the new regulatory regime, with the new players, the corporate players, their governmental players that are playing along. We just heard PayPal a few weeks ago declaring that they're going to allow purchases in cryptocurrencies. It's not just buying cryptos and selling cryptos on their platforms. It's also buying goods from different merchants on top of their platforms with the crypto money we hold in our digital wallets. So I have to say that cryptocurrency is here to stay. We're going to see it further along the way in the future. It's going to be in mass usage of all of us, undoubtedly. We are all going to hold digital wallets with cryptocurrencies in there. It's not just Bitcoin as a hype. It's definitely here to stay and to serve us all.
I'm a crypto girl myself, so I like that answer here. Okay, next, Suzanne, can you tell us what you're going long on into the fintech world?
Yeah, I would say what I go long on is embedded finance. So with embedded finance, I mean that, financial services are never our normally top first priority when we get up in the morning, but it's something we need to get something else done. So when we think about, hiring a taxi, Uber, you get out of that age, and ideally you would like from them a mortgage offer, the choices in terms of insurance. So you would like to get everything bundled in for the product you want to buy. If you want to buy a car, again, all those things should come with, almost from your car, a car lender. So I think that's one thing that financial services will be embedded in our daily lives. Also, I think we will get lots of inspiration from China. When we think what happens with Apple Pay, WeChat Pay there, and using social media platforms which embed all types of financial services. And in China, as on WeChat, you can invest, You can save, you can take microloans, you can take insurance, you can buy your movie tickets, you can do everything on one platform. And those type of platforms, which are all encompassing, we have not yet seen in the West. But I only could imagine it's a question of time, before we have got those being offered to us as well. And we're really, fintech will empower everything we do in our lives, but we won't notice it anymore because it will be behind the scenes, it will be invisible, but it will be there to make our lives easier.
Okay, yeah, thank you, Suzanne. And Agada, I'll pass the mic to you next.
Yeah, Nir basically said everything that I wanted to say almost. So I would just add on top of it. I definitely think that the digital asset cryptocurrency is a trend to watch, to go long on. It's not only, as Neil said, it's not only Bitcoin. Although if you choose to do anything in this industry and you haven't done before, then Bitcoin probably is it. But an entire segment of blockchain called DeFi, decentralized finance, and it relates also to what Giuseppe said. That allows people to basically interact with each other. A lot of things peer-to-peer, lending, borrowing on your crypto, borrowing cash for crypto, and so on. Opens a whole new world and an entirely new way of doing business. Removing the middle, a lot of things that go, to the origins of why blockchain started, but removing the intermediary, cutting costs in the middle, being able to control your own funds, manage your own funds, and so on. So definitely digital assets, and that also relates to putting a lot of traditional securities and moving traditional securities into that space, and having digital securities, or security tokens, if you want to call it that.
Yeah, absolutely. Thank you, Agada. And last but not least, we have Uri.
So I think, so first of all, it's a good question. And I think that the real question, if we're looking on the short term and the long term, because obviously there are trends that we see that are growing and will probably continue to grow. If it is crypto, obviously payments, everybody moved to pay with some kind of online payment. And we see the same with the wealth management in general, with investing. But the other question is how the economy will look like in a year. If people would, if there will be a depression, what exactly is the economy going to look like in a year? Because if we believe that it will be deteriorating from here, which I think is a fair assumption, then one of the areas that would probably benefit from that would be peer-to-peer lending. Also, I mean, depending on the interest rates, there are so many moving pieces that we can assume that some trends are growing as we see them, and some trends, depending on the situation in about a year, have the potential to explode.
Yeah, absolutely. All right. So, panelists, I want to thank each and every one of you for taking the time to take part in this discussion today. It's been a wonderful panel, fascinating stuff. For our audience members, that's all from me and our panelists today. Thank you so much for tuning in and for attending this virtual summit. I hope you enjoy the rest of your day, and see you all next time. Take care.
Thank you.
Thank you.
Thank you very much. Bye-bye.
Bye.